What is up, everybody? Welcome back to the Crypto Sherpa Show, where I read you those daily cryptocurrency news articles to keep you informed on what is going on. Now, I hope everyone had a great Labor Day weekend. 3 days off. What's not to complain, except the banks were closed. But you know what? Bitcoin is never closed. So if you need to make a wire transfer yesterday, too bad. Government holiday. You can't do that. But if you had Bitcoin, you could have sent that person Bitcoin instantaneously. So hope everyone had a great Labor Day weekend, had fun, stayed safe. And yeah, but what else is going on in the space? Like, everyone's still buying Bitcoin, as always. MicroStrategy. We don't need to cover the articles of everyone that pops up about him buying another 4,048 Bitcoin. So he's not stopping. We even got Metaplanet acquiring another 1,009 Bitcoin. And is there one other person doing it? Let's see. Nope. Just a fun fact that El Salvador has been buying 1 Bitcoin per day since November 17, 2022. Bitcoin has increased over 643% since then. And that was his post from 3 years ago. We are buying 1 Bitcoin every day starting tomorrow, and he has not lied about that. So yeah, so that's just a little quick tidbit of news for you. But let's go into our first news article, where it's just talking about how businesses are absorbing Bitcoin 4 times faster than it's mined. So it's like right now at first, like MicroStrategy was like already like doing a, like not a, what is that word? A self, well, he was basically causing a Bitcoin halving event because he was purchasing so much Bitcoin right then and there before as much Bitcoin gets mined, because there's only 450 new Bitcoin a day, and he was causing like a surplus because of it. Now we got businesses doing the same thing. So let's go through this article and learn a little bit more about that with some statistics. So businesses are outstripping our miner output several times over, potentially triggering a supply shock if exchange reserves continue to dwindle down. Now, private businesses and public companies are absorbing Bitcoin nearly 4 times faster than the rate at which miners are producing new coins, according to Bitcoin financial service company River. Now, these businesses include publicly traded Bitcoin treasury companies and conventional or private businesses, which collectively purchased 1,755 Bitcoin per day on average in 2025, according to River. Now, exchange-traded funds and other investment vehicles also bought an additional 1,430 Bitcoin per day on average in 2025, and governments purchased about 39 Bitcoin per day, according to River data. And then here is a chart showing the average daily Bitcoin flow from individuals, from Bitcoin left to be mined, and then the net inflows of it. It was Bitcoin treasury companies, conventional businesses, funds and ETFs, other entities out there, and governments. And then we always have to account for the loss of Bitcoin, which is on average, I guess numbers wise, is 14 Bitcoin a day. So that's just Bitcoin getting lost forever and just lowering the supply of the 21 million we got. Now, Bitcoin miners produce an average of about 450 new Bitcoin per day, triggering a potential supply shock if exchange reserves continue to shrink and institutions continue to hodl their coins. Now, analysts continue to speculate over the likelihood and potential impact of such a supply shock, with some predicting that it will be a bullish catalyst for Bitcoin's price. And we have a couple of catalysts happening this month in September as is. We have the rate cut coming, which is most inclined that's going to happen. So that's always bullish for Bitcoin news. If we got word that they were not going to do it and instead increase it, then we would have definitely prices would have gone down. But then not only that, but we have a Solana catalyst. I think that ETF should be like all getting pushed through today. So Solana may be in a bullish sentiment, but that's also another catalyst to look at. But Bitcoin treasury companies are generating massive demand for Bitcoin right now. So Bitcoin treasuries companies acquired at least 159,107 Bitcoin in Q2 of 2025, bringing the total amount of Bitcoin held by businesses to about 1.3 million Bitcoin, according to River. Now, these holdings firms are led by Michael Saylor's Strategy, which is the largest known Bitcoin holder in the world and holds a whopping 632,457 Bitcoin in its corporate reserve, according to the Bitcoin treasuries. And I think, I pulled this article up over the weekend, and when I got the word of him buying an extra 4,000, so let's just add that to its stockpile. Now, Adam Livingston, author of The Bitcoin Age and The Great Harvest, previously said that Strategy is single-handedly synthetically having Bitcoin through its rapid accumulation. Now, here's a chart of the Bitcoin ownership distribution on August 25th. So again, we have Satoshi's wallet, which holds like at least 4.6 of the supply. Other entities control 1.4 4%, lost Bitcoins at 7.6% of that supply. We have about 5.2% left to be mined, and then we have individuals, businesses, ETFs, and government funds. Now, despite Strategy's frenzied Bitcoin buying, the company's corporate treasury officer, Shirish Jajodia, says that Strategy does not impact short-term Bitcoin prices through its purchases. Now, Jajodia said that the company spreads out its buying through over-the-counter transactions that occur off exchanges and do not affect spot market or price moves. So to break that down a little bit more, it's like when you buy on the exchanges, that is definitely fluctuating the price at all. So these big guys are going over the counter to these companies that are also like miners themselves, buying just directly from them. They're just going peer to peer. So when like you're like sending Bitcoin from your wallet to another person's wallet, that's not going to affect the price at all. And that's basically how these guys are buying. They're doing it over the counter. You know how you get paid under the table, like with cash usually, like they're doing it over the counter so it doesn't affect the price. Because if they were buying all this Bitcoin, that should easily skyrocket Bitcoin to $200,000, $500,000, and they can't have that happen. So they want to keep it as low as possible. Now, Bitcoin trading volume is over $50 billion in any 24-hour period, and that's a huge volume. So if you're buying just $1 billion over a couple of days, it's not actually moving the market that much because of this reason. But no, so like all of these companies and everything, it's like they are absorbing so much Bitcoin right now. So guys, just like try to acquire it if you can. Like again, and just hold on to it. Don't expect like the life-changing like money change by holding Bitcoin right now. This is down the road. This is life-changing, more generational wealth. This is going to be for your kids and your grandkids. As long as you just hold on to it in your own custody, then like those guys will be so well off. So just try to at least shoot for 0.01 Bitcoin. That's 1/100th of a Bitcoin, so that's about $1,000 right now. Yeah, because if you had 0.1 Bitcoin, that'd be around like 10,000. I know it's under that, and then one full Bitcoin's priced at 100,000, just a little above that. I think we're at where are we at with Bitcoin? We are currently at $110,000 right now per coin. And since we're already on this chart, let's take a look at the market right now. Look at these bubbles going. So what's happening in the space? We got Fartcoin up 5.2%, the pristine asset. We have World Liberty Finance down 9.4%. I got an article about that, so we'll cover that later on. But it looks like the market is seeing a little bit of green right now, and this could flow into the altcoin season, which we'll cover an article after we talk about El Salvador splitting up their Bitcoin across at least 14 different wallets right now. So this is a good thing to actually do. There's always that saying out there, don't hold all your eggs in one basket. So when you start getting a nice lump sum of Bitcoin, like it might be good to separate it into like maybe 1, 2, or 3 wallets, just so that way in case something happens to one wallet, you're not losing the entire pie. So it's just like a nice little safe trick to do. If you want to keep it all in one wallet still and just leave it there, you're fine. Yeah, that's still fine too. But if you're, again, this is just extra tips just to help security investment practices. But let's cover this article on 14 different wallets they're doing. So El Salvador has transferred its 6,274 Bitcoin into 14 new wallet addresses as part of its security measure to protect against the threat of quantum attacks. Now, El Salvador has redistributed its Bitcoin reserve holding into 14 new wallet addresses as a precaution against potential quantum computing threats. Now, by splitting funds into smaller amounts, the impact of a potential quantum attack is minimized. Now, El Salvador's Bitcoin office said in an X post Friday, adding that each Bitcoin address holds up to 500 Bitcoin. Now, the Bitcoin office explained that once funds are spent from a Bitcoin address, its public keys are revealed and then are vulnerable, making it a target for quantum computers to crack down. So should the technology evolve into a significant threat in the future, well, just change your wallet. If you're dealing with legacy wallets out there, like the first ones I know that just came out, yeah, those could be prone to quantum computing based on its tech. But we upgraded to the SegWit wallet technology out there, and that one's more quantum computing protective out there. So if you're on a legacy wallet, just move it into a new wallet, a SegWit one, and you're good. So here's a post from Nick Newman on X. Interesting and great to see large/public Bitcoin holders taking a proactive step to protect against future quantum threats. El Salvador continues to be a good model for how nations should manage their Bitcoin treasury. Now, I hope the U.S. SBR take notes on this. And yeah, El Salvador has been a great reference for just starting everything off. They were the first ones to make Bitcoin actual legalized tender, made it on par with the United States dollar. So they are great to follow on. But more than 6 million Bitcoin, worth around $650 billion, could be at risk if quantum computers become powerful enough to crack elliptic curve cryptographic keys. Now, quantum research company Project 11 said in April. Now, on-chain transfers have been made. El Salvador previously held its 6,274 Bitcoin stash worth $678 million in a single address, but blockchain data shows that those funds were transferred into 14 new addresses. And again, everything is public on the blockchain. The blockchain is just a distributed ledger of facts and data, and it's public for everyone to see, and here we see it. So you can't really hide out there in the space, which is beautiful for money because we don't want anything to be hidden. We want it to be transparent. Now, quantum isn't a worry for now. While industry pundits praised El Salvador's move, Project 11 noted that quantum computing is still far away from being capable of hacking Bitcoin. A Bitcoin private key contains 256 bits, and no quantum computer running short algorithms have managed to even crack a 3-bit code yet. So we are still, again, way off from there. Now, Michael Saylor, the architect behind Strategy's Bitcoin playbook, said that quantum computers' threat to Bitcoin is mere hype in June, adding that if it ever became that serious of an issue, the protocol's core developers and hardware manufacturers would implement fixes to it. Now, the answer is Bitcoin Network's hardware upgrade and Bitcoin Network software upgrade, just like how Microsoft, Google, and the US government do upgrades right there. So again, like the code in Bitcoin can be upgraded if it's all approved on by the miners and coders out there. And again, if like there is a threat to quantum computing, we'll make that fix. That's it. It's that simple. Now, El Salvador still isn't entangled in the IMF drama right now. El Salvador's Bitcoin bias have been called into question after International Monetary Fund reported in July claimed that the Central American country has not yet made any new Bitcoin purchases since February, but we know that they have been. Now, the country's Bitcoin office hasn't directly addressed the claims and has continued to post about its Bitcoin purchases on X. Now, El Salvador has secured a $1.4 billion funding deal from the IMF in December 2024 in exchange for scaling back its Bitcoin initiatives, among other conditions, through the terms appear to be under dispute between the two parties. And again, that change was just really, like people thought, oh, they took away their currency status. No, they just took away like the actual law saying if you have a business that can accept Bitcoin, you have to. So they just basically removed that one. But again, the businesses that already started it and are accepting Bitcoin are doing fine. They can still keep doing it. just not on the law saying they have to do it. So that was just part of the conditions with this IMF deal. But no, this is a smart play to do if you're holding lots of Bitcoin and cryptocurrencies. Just diversify your bags. Hold like a put it into 2 wallets, 3 wallets. And again, like if you want to know why that's also good to do, we should be having a class coming up like this coming month here at the Crypto Club. So it's something to pay attention to. Did I save a photo of that? Let's see. No, I did not. Is it in our newsletter? Hold on. No, how did I not even put it in our newsletter? Well, but yeah, so sometime this week you can check our calendar on our website, and we are going to be talking about why having multiple wallets is a good thing to do. Now let's continue on with some Bitcoin / moving into the altcoin space. Like, are we about to see a Bitcoin or an altcoin season now? But a Bitcoin whale sitting on $5 billion dumps some more Bitcoin to buy Ethereum. And this is usually the first telltale sign of the altcoin season comes in, just how the flow of money goes in. Like, I love this chart we saw on Ivan on Tech on the path to the alt season and how the money flows. Like, first we're in phase 1 with Bitcoin. Flow of money moves into Bitcoin, causing price surges. And we've been seeing that for this past year. Now the money flows into Ethereum, but it struggles to keep up with Bitcoin. Ethereum goes back and forth while Bitcoin and starts outperforming it. Then we're in phase 2, where Ethereum is outperforming Bitcoin, and then we hear talks about flipping. And then when we start hearing about that, money is starting to trickle down from larger into the larger caps now, where we see overlaps. So that's where phase 3 happens, where Ethereum has outperformed Bitcoin, and then we got large cap coins like Solana, probably XRP, Cardano, Chainlink, so the other large cap tokens out there. And then regardless of the market cap, some altcoins with strong fundamentals overlap this too. And then phase 4, alt season. So again, it's like we're kind of seeing the telltale signs of alt season just coming just around the corner. So if you want to top off your bags right now, which I still need to do, I keep saying I'm going to, like this could be your last opportunity to do that, to try to build a little extra wealth, because Bitcoin's a great way to preserve your wealth. But if you don't have the wealth and you need to make it, the altcoin space is where it's at. But again, it's very, very risky. Nothing is guaranteed. If you go into that space, I tell people, just assume you lost that money. So that way it's no loss, no harm right there. Sure, you lost some money, but you just got to assume right then and there. Because again, these altcoins could have potential to 5x, 10x, 100x right there. But again, it's not guaranteed. I will honestly say the most guaranteed thing right there is just putting your money in Bitcoin, holding it for the long haul, for like your entire life. Again, I always say this is generational wealth. It's going to be for your kids and your grandkids to really benefit from it. So let's go through this article and hear about this move of this coin. So a wealthy Bitcoin holder is exchanging some of their long-held gains for Ethereum, swapping $260 million worth of Bitcoin for Ethereum on Friday. So a major Bitcoin holder deposited 2,000 Bitcoin worth more than $216 million to Hyperliquid's exchange and methodically sold it into Ethereum, according to data from a network block explorer, Hyperscan. Now, the address ending in ECB43 first received 1,000 Bitcoin worth around $108 million across two transactions around 10:57 a.m. Eastern Time this morning. Now, shortly thereafter, the account began selling small batches of Bitcoin for Ethereum, often selling 1 to 1.5 Bitcoin at a time and purchasing the corresponding amount in Ethereum until its Bitcoin was exhausted. And I usually do this too all the time. When I'm dealing with small, big transactions, I will do it. Let's see. Phone keeps distracting me. That's Gloria. But no, I always when I do big transactions, I like to cut them up in like multiple ones because again, like that with the slippage price going on, I always want to make sure I'm doing the best. And these guys were doing it to try to get the best price they could. So if you're doing big trades, it's good to do multiple transactions to it. I do it all the time. If you want to do it all at once, go for it. This is your money. You can do what you want. But it later re-upped with another 1,000 deposit following the same playbook before ultimately transferring all of Ethereum, more than 42,750 ETH outside of its wallet. Now, on-chain analytics firm Arkham Intelligence has connected the address to two others that collectively hold $5 billion worth of Bitcoin and one that deposited at least $800 million worth of Bitcoin to HyperUnit on August 24th. Now, HyperUnit is a platform that allows native tokens like Bitcoin and Ethereum to be deposited and ultimately traded on Hyperliquid. Now, a whale holding over $5 billion of Bitcoin is currently buying ETH. He just moved the $1.1 billion of Bitcoin to a new wallet and has started purchasing ETH through HyperUnit/HL, said an Arkham post on X, and this whale bought $2.5 billion of ETH just last week, and he's still buying. And here is that post from Arkham Intelligence as pointing out, because again, everything's on chain and being tracked, and there's big transactions going through, the community knows about it. Now, last week, a Bitcoinville played the same trade, opting to swap some of its Bitcoin for a leveraged $75 million worth of long positions on ETH. And Bitcoin whales have been coming alive as of late. Now, one Bitcoin billionaire recently made the largest transfer of old Bitcoin or coins which haven't moved in 10 years, and in history when it transferred more than $8 billion worth. Now, later, that same Bitcoin OG cashed out more than $9 billion of the top crypto asset, selling more than 80,000 Bitcoin acquired in the Satoshi era via crypto asset firm Galaxy Digital. So now both Bitcoin and Ethereum are trading around 4% lower on Friday, changing hands at $108,000 and $4,300 respectively. So since Friday, if you were scared over the weekend, hoping that price wasn't going to slip down to 100, you are winning because again, Bitcoin currently is at 111,000, but Ethereum's still at that same price right now. But that is a Bitcoin whale moving its crypto over to Ethereum. And again, is alt season around the corner? Well, we're just getting telltale signs. Nobody has a crystal ball to the future, so we can't tell you exactly when it's going to happen. But just from what we see, it looks like it's going to. But let's continue on now with some altcoin news. And Joe from California, top of the morning. How you doing? And what is eCash? Confused? I am not sure. I'll have to take a look at that later on. But let's continue on with the news on Ethereum scores milestone as Chinese firm floats its first public real-world assets bond. So real-world assets are, and everything being tokenized on the blockchain is happening. So this is, again, just more adoption news, and they're choosing Ethereum for it. And more text messages. Everyone's trying to get in contact with Sherpa right now. But China has taken another step into blockchain-based finance, but in a way that avoids direct involvement with cryptocurrencies. Now, a state-owned firm in Shenzhen has launched a digital bond offering on Ethereum, showing how the country is selectively embracing new technology while also keeping its hard stance on crypto trading in place. Now, this is going to be the first state-backed real-world asset bond on Ethereum. According to reports, Fuxian Investment Holding completed a 500 million yuan issuance of offshore bonds on August 29th. Now, the bonds equal to nearly $70 million, and they were rolled out in Hong Kong and listed on Ethereum's blockchain. They carry a 2.62% annual interest rate and will expire in 2 years. Now, the company described the deal as part of an effort to expand its funding sources while also responding to the growing use of real-world assets and tokenization in global markets. Now, it also pointed out to Hong Kong's supportive policies as a factor in the decision, saying the bond aligns with the district's push to attract digital asset innovation. Now, here is UZX's official breaking news. Fuxian Investment Holding announced issuance of the world's first public real-world asset digital bond on a public blockchain. But crypto is still off limits at home in China. The move does not mean that China has softened its ban on crypto or Ethereum. Back in 2021, Beijing imposed a full ban on crypto mining and trading. And then again, we saw the Bitcoin's hash rate go low in that brief moment. But again, all those miners just packed up their stuff, moved just a little bit outside of the banned country, wherever it's at, reset it up, and boom, our hash rate was higher than ever. So China's always tried to ban Bitcoin. It always caused some price dips, but Bitcoin's always come back from it. Now, officials at the time said that measures were needed to control energy use and to guard against risks that might destabilize the country's financial system. Now, that ban remains in effect today, and ordinary citizens and companies in mainland China are still blocked from using or trading cryptocurrencies. Now, what is allowed, however, are limited experiences like tokenized bonds that stay within the bounds of traditional finance. Now, Hong Kong is a testing ground right now. By routing the deal through Hong Kong, Beijing can keep its domestic ban intact while still signaling that it wants exposure to blockchain-based finance. Now, the bustling metro has been given more room to try out digital asset projects, and this latest bond fit into that role. Now, China's strategy delineates a clear split between blockchain as a tool for finance, as it embraced in regulated manifestations, while crypto as an unfettered market asset is still off limits. Now, stablecoins, particularly dollar-denominated stablecoins, have also attracted scrutiny in Beijing, with officials concerned that they can undermine other currencies based around the world. Now, reports suggest that real-world asset bonds may be the first in a series of state-backed blockchain and Ethereum financial projects tied to Hong Kong. Now, for now, the issuance shows that China's intent to cautiously explore blockchain without reopening the door to Bitcoin, stablecoins, or wider crypto adoption is still happening. So again, countries around the world are still they're still dipping their toes in it, but they understand they have to get involved with it. And it looks like they're going to be testing it out through Hong Kong to still keep with their crypto rules they got right now. Now, speaking of Hong Kong, it looks like this one company acquired a France company to expand its global crypto services. So this company is Japan's CoinCheck, acquires France-regulated Apollo to expand its global crypto services. So the deal announced on Tuesday will see all shares of Apollo exchanged for newly issued ordinary shares of CoinCheck Group. Now, Japanese crypto exchange CoinCheck is expanding its global footprint with the acquisition of Apollo, a Paris-based digital asset prime brokerage regulated by France Financial Markets Authority, the AMF. So the deal was announced on Tuesday, and we will see all shares of Apollo exchanged for newly issued ordinary shares of CoinCheck Group NV, with closing expected in October 2025. Now, that's with financial terms were not disclosed about this, but CoinCheck, founded in Tokyo in 2014, is one of Japan's most recognized exchanges and is owned by CoinCheck Group NV, a Netherlands-based holding company that went public on Nasdaq last year under the ticker CNCK. Now, CoinCheck eyes European growth with strategic Aplo acquisitions. The acquisition of Aplo comes as CoinCheck plans its expansion into the European institutional crypto market. Aplo brings us proven technology, expertise recognized by institutional clients in Europe, and a high-performance team with an entrepreneurial culture, said CoinCheck's group CEO, Gary Simanson in a statement. And he said, by combining our strengths, we aim to better serve institutional investors and enhance our B2B2C offerings. And again, this is also a strategy among companies too. Instead of having to gain a license in certain countries or areas, it's let's just acquire a company who already has a license. I'm not sure if these guys already have a license to work and function, but usually when they do, it's just to gain access. It's just an easier way for business to gain access to certain countries and districts. But founded in 2019, Aplo has established itself as a leading player in crypto prime brokerage, serving more than 60 institutional clients, including hedge funds, asset managers, and banks. The firms were recently named Prime Broker of the Year, EMEA, at the 2025 Hedge Week Global Digital Asset Awards. Now, its platform provides algorithmic execution, deep liquidity access, and strong compliance infrastructures. Now we have a tweet from Raphael Bloch, just in. CoinCheck acquires its French crypto startup, Aplo, which was founded in 2019. And CoinCheck is one of Japan's largest exchanges, employing at least nearly 200 people. Now, the deal will also support CoinCheck's broader ambitions to scale its institutional services globally and pursue synergies across liquidity, trading infrastructure, and banking partnerships. Apollo is currently registered as a digital asset service provider with the AMF and seeks full license under the EU's MiC framework. So it looks like they're trying to acquire it. And like I said, so I guess they were in the works. They already had one deal and service provider license already. And so again, this is just what businesses do to just gain more access. Now, all four Aplo co-founders, including Oliver Yates, Arnaud Carré, Simon Doyer, and Jacques Lolli, will remain with the company post-acquisition, and Galaxy Digital Partners acted as exclusive financial advisors to Apollo with legal counsel provided by Square for Aplo and DeBraw and Gintet for CoinCheck. Now, Japanese public firms have ramped up its Bitcoin holdings despite the market dip. Again, so several Tokyo-listed companies are accelerating their Bitcoin treasury strategies, collectively adding over 156 Bitcoin to their balance sheets this week. Metaplanet led the move with a 103 Bitcoin purchase worth $11.7 million, raising its total to nearly 19,000 Bitcoin and positioning itself as the seventh largest corporate holder globally. The company also gained inclusion in the FTSE Japan Index, boosting investor confidence despite short-term stock volatility. Now, other firms followed suit. We got Remix Point acquiring 41.5 Bitcoin and continues exploring synergies between Bitcoin mining and its energy services, marking a pioneering step in Japan's public sector. ANAP Holdings and Agile Media Network also added to the reserves, while Def Consulting announced that the start of its own Bitcoin treasury program is happening. And then supporting this corporate adoption wave, Japan's regulator clarity has been a decisive factor. The Financial Service Agency plans to formally recognize crypto assets as financial products under the Financial Instrument and Exchange Act by 2026. And alongside proposed tax reforms could lower crypto capital gains from rates as high as 55% to flat 20%, making corporate adoption far more appealing now. So again, everywhere's like changing their rules, making it more crypto friendly. So it makes sense that we see all this news articles and just the price going up. And again, guys, so do not sit on Bitcoin. Acquire where you can, because again, there's only 21 million. It's the scarcest asset ever, and you just don't want to be someone left without it. But let's take a quick commercial break before we continue on with the news, and I can rest my voice, take a sip of soda. So we will be right back.
Attention visionaries and pioneers, the future of wealth is here, and it's spelled BITCOIN, Bitcoin. Introducing the exclusive Loans for Bitcoin program at the Bitcoin Ben Crypto Club, where your good credit unlocks 0% interest loans for up to 2 years, or term loans up to $250,000 spread over 7 to 12 years. Why wait? Use this capital to acquire the world's fastest appreciating asset, Bitcoin. With prices hovering around $94,000 and projections aiming much higher by the year's end, the time to act is now. Leverage isn't just for Wall Street anymore. Arbitrage the low cost of your loan against Bitcoin's explosive growth. It's smart finance for the modern investor. And privacy matters. Our no KYC Bitcoin purchase program ensures you buy and self-custody your assets in your own wallet. Your keys, your Bitcoin, your future. And as the world shifts to digital currencies, be ahead of the curve. Front-run corporations, governments, in this greatest financial revolution of our times. I'm Jay Bose, CEO of Bitcoin Ben Crypto Club. Call or text us today at 941-413-6920 and get started on that loan application. Secure your legacy. You will thank yourself tomorrow.
And we are back, and I am looking up some more information out there. But Joe, during that break, I was also looking up like what exactly is eCash, because I wasn't quite positive about that. And eCash is just an electronic payment system and the name of an early digital currency project by cryptographer David Chaum in the late 1980s, which focused on anonymous and secure online transactions using blinded cryptography, laying foundational principles for later digital currencies like Bitcoin. The term can also generally refer to any digital money that facilitates anonymous, direct, or offline peer-to-peer transactions bypassing traditional financial systems. So I hope that cleared up what eCash was for you. So yeah, it's just basically digital money, kind of acts like Bitcoin, but it was like kind of stemmed from it. It was early adoption by this gentleman. But welcome back, guys. We were covering the latest cryptocurrency news articles for you, for those just tuning in. And yeah, for this little tidbits of information of this, like crypto and all that, you have access to this information by joining the crypto club. Any location, even if it's not even near you, we're even working on I think I'm speaking a little bit too soon, like an online membership pass for those of you not near a local location, you will still gain some access to it. So we were working on that momentum. But what else is happening in the crypto space right now, or the crypto club space, like in Nashville? So if you're in the Nashville club location, we have a couple events going on this week. We have this Saturday, is this our Bitcoin meetup? Is this Saturday or Thursday? But they're having a Bitcoin 101 on September 6th, happening from 103. And then later on in the month, we'll be having our Bitcoin 101. So if you're in our Nashville location around there, these may be some events you may want to attend. Then also in our Massachusetts club, looks like Ed is having a We the People event with the TPUSA. So yeah, if you guys are members of the club, definitely sign up to attend that event going on. But we even have the Johnny Appleseed event in Massachusetts happening later this month. Bitcoin Ben will be there himself. So lots of stuff going on. And let me go to our website here, where you always take a look at all of our events and everything. So I'll go to events on our website, and you can see that we have a ton of stuff always going on here in the space. Well, here we go. Yep. So we got my show, the Bitcoin Ben show. We have our class today on what is money. Let's go with the list. Also, we have shows like Women's Voices, Bitcoin Thursday with Dr. J, more crypto classes every Tuesday and Thursday. And here we're starting our first Crypto 101 meetup here. So yeah, so Thursday nights at 6 o'clock, guys. If you want just some nice friendly crypto conversations, learn to just have some talk, like what's going on here, like come on out Thursdays to the Bitcoin Ben Crypto Club in Sarasota. And then again, we have so many programs and offers we have to offer you. But that's a little tidbit of what's going on around the crypto clubs. I think I also want to show you our Las Vegas club. Looks like they got a little friendly pet going on in here. Like here we got Ken Bozak. He was showcasing the club. But it looks like they have a crypto squirrel in the club. Oh, that's so cute. That's so cool. Baxter, you got some competition. Look at that. Look at that. Just like here, we have the crypto dog, Baxter. You see her all the time. We all love her. She's our greeter. Looks like in Vegas, they have a squirrel. So I really hope to see that one day. But let's continue on with the news now, dive on into what's happening in the blockchain space. So next up, we have Avalanche and Toyota Blockchain are designing autonomous robotaxi infrastructure right now. So tokenizing mobility and autonomous robotaxis may be among the next emerging blockchain trends with fully on-chain business models. So interesting. Avalanche and Toyota Blockchain Lab are planning the future infrastructure necessary for self-deployed autonomous robotaxi fleets, highlighting another emerging use case for blockchain technologies in the future of transportation. Now, Avalanche and Toyota are researching the creation of new blockchain layers to orchestrate trust and unlock mobility value through a blockchain-based intermediary network called the Mobility Orchestration Network. Now, built on Avalanche's multi-chain infrastructure and interchain messaging, the proof of concept aims to enable secure data sharing for vehicle financing, ride sharing, insurance, and carbon credit tracking, while also streamlining ownership transfers for secondary markets. Now, Avalanche and Toyota's forthcoming MON network will open the gateway to new emerging use cases, including the future implementation of fully autonomous robotaxi fleets. According to Roy Harada, head of Japan at Ava Labs, the company behind the development of the Avalanche network. Now, here's how mobility belongs to the network. We have the manufacturer of the vehicle, who holds legal ownership of the vehicle, the operates the vehicle, we got the drives the vehicle, we got provides insurance for the vehicle, and maintains the vehicle. So all this can be blockchainized. Now, robo-taxis are one of the most interesting emerging use cases for the network, he said, speaking during Cointelegraph's Chain Reaction Daily live X Spaces show on Wednesday. Now, the payments, the leasing, you can actually start your own robo-taxi service by raising funds on chain with some kind of security token system. Investors will be able to raise their funds and track their robo-taxis via the blockchain, meaning that the entire business model can be built on-chain from scratch, said Hirata. And here is a post from Garrett Jeckinson. Toyota, the Japanese automobile manufacturer, is deeply exploring blockchain and has published a deep research paper with AVAX. And we're chatting with Roy Hirata live on the Chain Reaction. So you can take a look at this on Cointelegraph's X account if you want to watch their quick little video. But robo-taxi's infrastructure still needs manufacturers and regulators right now before this can even happen. Regulators and manufacturers still need to come on board to realize the future vision of fully autonomous robo-taxi fleets, with manufacturers being the most difficult party to onboard. Now, regulators and car makers need to work together to enable official record keeping via blockchain ledgers and to enable use cases like on-chain ownership transfers, said Ava Labs. Hirata added. He said that there's always an official record in different countries, different formats, so having that and the manufacturer working together on the blockchain is the most key task that we have to tackle. Now, meanwhile, tokenization of mobility may emerge as the next key trend for cryptocurrency investors, following the latest proof of concept from Toyota and Avalanche. Now, mobility remains difficult to track for vehicles, and future use cases will require lots of systems and decentralized applications to support its tokenization. Other firms are also building on the Avalanche blockchain, real-world assets, and tokenization capabilities. And also, Grove, an institutional-grade credit protocol backed by Stakehouse Financial, is targeting $250 million worth of tokenized real-world assets on Avalanche's network in partnership with $373 billion asset manager Janus Henderson, and that was reported by Cointelegraph on July 8th. Now, I'm not saying that Avalanche is going to be pumping this season, but again, there's bullish news. People are utilizing it. They're building on top of it. So how high can Avalanche prices go? I don't know. But again, this is bullish news. I just feel like if I put money into it, Avalanche price would go up. But again, that's not financial advice. But that's what Toyota and Avalanche are doing, just getting ready to onboard robo-taxis to a blockchain. But again, they need the manufacturers to get on board first. Now, just since I got this text, looks like we got a new scam going out with whoever has phone calls. Let's see. Your Coinbase withdrawal code is 1937. Do not share this code with anyone. If you have not requested this, please call this number. Fake Coinbase account. Coinbase or exchanges, wallets, they do not contact you. But look at this phishing attacks. They're trying to get me to go, oh, I didn't make that transaction on Coinbase. Let me call this number right now. They want you to call that number. That's not Coinbase's phone number. So guys, if you get a text message like this, since I just got one, obviously they have a mass text going out right now. Just delete it. Block it, delete it. I'm doing that right now. Delete and report as junk. That's all you do. Boom, you're safe. If you want to go to your Coinbase account and see that everything's fine, do it. You have that ability to. Just never click on a link that gets messaged from you from someone you do not know or an email claiming to be someone. You already have all the information you need to log onto your account. Just go there like you usually would. Just do not click those links. But look at that, scamming trying to happen live during the show. But let's continue on with the news now. What else is happening? It looks like Crypto.com and Underdog team up to launch sports prediction markets in the US. So, fast-growing fantasy and sports gaming firm Underdog has partnered with Crypto.com Derivative North America as CFTC-registered exchange and clearinghouse and an affiliate of Crypto.com to offer sports prediction markets in 16 states. Now, the solution will prioritize states where legal sports betting has not been adopted, such as California and Texas, the companies told CNBC on Tuesday, with Underdog becoming the first sports gaming operator to offer prediction markets. Now, it is designed to provide millions of people a federally compliant way to predict the outcome of their favorite sports events via the Underdog app, according to a subsequent statement from the Crypto.com. Now, prediction markets are one of the most exciting developments we've seen in a long time. Underdog founder and CEO Jeremy Levine said, while we're still new and evolving, one thing is clear, the future of prediction markets is going to be about sports, and no one does sports better than Underdog. So following the launch, fans will be able to trade on sports outcomes across major leagues like the NFL, NBA, MLB, and college football. And the companies explained that prices update in real time, letting them react instantly and share their views on every play via the game's license operator. They said, "We're thrilled to partner with Underdog to enhance the sports experience for customers nationwide with the ability now trade using Underdog's technology." Now, the all-in-one app, Travis McGee, managing director and global head of capital markets at Crypto.com, said that we were the first to offer sports event contracts, and our technology partnership with Underdog will provide more to CDNA's innovative offerings. Now, Crypto.com and Underdog's prediction market joins the likes of Polymarket, Kashi, and Robinhood in offering sports events contracts, enabling traders to buy and sell sports outcomes with odds set by the market, not the bookkeeper. Now, the CFTC and federal courts are still debating whether sports prediction markets count as gambling, infringe on state authority, or violate the Indian Gambling Regulator Act. In May, the CFTC moved to dismiss an appeal against Kashi after the federal judge ruled that the agency had overstepped its authority and attempted to stop the crypto predictions platform from allowing users to trade contracts. So we'll see how this plays out, if they can keep doing it or not, but they will be rolling out with this partnership. So if you like betting on sports events and you don't want to go to Polymarket or Kashi, looks like you'll be able to use Crypto.com's, well, no, not Crypto.com, you'll be able to use the Underdog app, who did partner with Crypto.com. So that's some more exchange news going for you, and also sports betting news. What else is happening in the space? Who else is adopting some new technology? Looks like Web3 companies turn to hardware with crypto-powered phones and consoles right now. That's a big step going forward. Gaia Labs' AI smartphone and Solana's latest devices have highlighted a renewed push to merge blockchain features in consumer tech. So Web3 companies are exploring ways to move beyond just apps and tokens, experimenting with hardware devices like phones and consoles that merge crypto functions with everyday tech. Now, Gaia Labs, a decentralized AI and Web3 infrastructure company, on Tuesday announced its upcoming AI smartphone for users in South Korea and Hong Kong. Built on Samsung Galaxy's S25 Edge hardware, the device runs AI models directly on the phone, letting users interact with agents without relying on cloud services. According to the company, Web3 functions include on-chain identity support, a preloaded Gaia domain, and tools for deploying custom AI agents. Now, Gaia joins a small group of blockchain ventures experimenting with physical devices. Over the past few years, several projects have tried fusing blockchain with mobility devices. We have Solana Mobile, a subsidiary of Solana Labs, released in August its second-generation device, the Solana Seeker, claiming over 150,000 pre-orders and shipping to more than 50 countries. The company's first mobile device, the Saga phone, which was launched in 2023, featured a built-in seed vault and Solana DApp store tied to the Bonk Token's meme coin airdrop. Now, Web3 entrants aren't necessarily trying to replace big tech giants in the smartphone industry, such as Apple and Samsung. Now, in a blog post tracing the evolution from the Saga to Seeker, Emmett Hollier, general manager of Solana Mobile, said that their goal is to create something entirely new, a mobile ecosystem that puts crypto users and developers first. Now, pioneers in the space include Taiwanese electronic maker HTC in October 2018, where it announced the pre-sale of the Exodus One, a blockchain-powered Android device featuring a built-in hardware wallet, the Zion Vault, and support for multiple blockchains, including Bitcoin and Ethereum. Then in 2022, we have luxury brand Virtu launched the Meta Virtu, a smartphone with a dual Web2/Web3 platform and crypto wallet features, and also NFT support. Now, the success metric isn't market share. It's providing that decentralized alternatives to big tech, AI monopolies, and they are technically and economically viable, said Shashank Sripada, co-founder of Gaia. Now, Web3 gaming consoles in 2025. So not just phones are being built, we even got some gaming devices. So alongside phones, teams behind major blockchains have also experimented with handheld gaming devices. In late 2024, Mistin Labs, the team behind the Sui blockchain, unveiled the Sui Play OX1, built with Playtron. The console combines full PC gaming with native Web3 features like ZK login and on-chain asset management. And then in August 2025, Solana Mobile announced the Play Solana Gen 1, a portable console that doubles as a hardware wallet. And it includes Solana wallet integration, transaction fingerprint security, and Solana's DApp ecosystem access. Now, pre-orders opened in 2025 with the first unit set to ship in October, so they're just one month away from that. But yeah, Web3 companies and other businesses out there, even some blockchains out there and their subsidiary companies are looking at hardware as just another way to, just this little implement just blockchain with our traditional technologies we got right now. So this could be a big up and coming business out there, and we may see more companies jump on too. So is Apple and Microsoft and Samsung going to go away? Probably not, but they'll probably be adopting some of these technologies too into their newer phones as this progresses further. But that's some hardware news for you. Now let's talk about the World Liberty Finance Token. What's been going on there? So World Liberty Finance Token has fallen on debut as governance weighs liquidity fees and the buyback plan. So WLFI token holders are voting on a proposal to use liquidity fees to buy back and burns as the token slides on initial trading. And let's take a look at that crypto bubbles chart. Like, where were you at? WFL. Yeah. So it's actually gaining some price right now. It was like its lowest was like down like 20% or 12% when I saw it. But yeah, when it first came out, it was around 28 cents. Currently it's at 22, so down 6 cents. So not a huge dip there. But let's hear a little bit more about this. So less than a day through its Labor Day debut, World Liberty Financial's WLFI token fell sharply as trading volume swelled nearly tenfold. The governance token dropped from a high of 33 cents to near 21 cents in late Monday's trading before settling around 24 cents, with trading volume increased from approximately $259 million at its launch to $2.5 billion, according to data from CoinGecko. Now, WLFI token is down approximately 14% from its debut price of 28 cents, but remains significantly higher for early whitelist buyers who acquire tokens at just around 1.5 cents each. Now, in light of recent developments, a governance proposal has appeared calling for all liquidity fees from the project's pools to be directed toward buybacks and permanent burns. So posted on the project's governance forum, the proposal aims to redirect all fees from protocol-owned liquidity on Ethereum and Binance and Solana into the open market, and WLFI purchases, which are then sent to a burn address, thereby permanently reducing supply. So that's one way to try to control the price action of it. But if approved, WLFI would collect fees from its own liquidity positions on Ethereum, Binance, and Solana, and then use them to buy tokens back on the market and then send the purchased tokens to a burn address. So that way it's just out of the market and no one can ever touch it again. Now, the proposal describes this as a measure for direct supply reduction that would effectively increase relative the weight for the committed long-term holders. It also links the mechanism to network activity, stating that more usage equals more fees, which equals more WLFI burned. Now, however, analysts say that the effect may be less decisive when weighed against WLFI's broader token economics. So while the buyback and burn model can provide structural support for the token price, its overall impact may be limited given WLFI's large impact valuation and relatively low circulating supply, said Min Zhang, senior analysis at the quantitative trading firm Presto. Now, Zhang notes that the supply pressure may also outweigh the proposal's impact, and the scale of upcoming unlocks is likely to exceed the buyback amount. And with few live products currently driving organic demand, the long-term effect on the price stability remains uncertain, Zhang explained. So again, it's just WLFI is trying to find its price range at the moment. It was just released. Now, WLFI's approach mirrors shareholders' return tactics more common in mature firms than in growth stage ventures. In traditional markets, companies with high growth typically reinvest profits rather than prioritizing buybacks or dividends, he explained. Allocating all liquidity fees exclusively to burns could limit WLFI's flexibility to fund product development and the ecosystem incentives or even strategic investments. But given the scale of WLFI's fundraising, the Treasury may still be sufficient to support future growth, he added. Echoing the sentiment that Ryan Yoon, senior analyst at Tiger Research, told Decrypt, the buyback and burn mechanism should theoretically support token value through supply reduction. Now, WLFI currently lacks operational services beyond just basic liquidity provision, which could result in minimal fee generation, you said. Now, positioned as a decentralized financial project, World Liberty Financial was designed as a lending and borrowing service, although its core platform has yet to be launched. Now, the Trump-backed venture has already rolled out a dollar-pegged stablecoin which currently ranks as the 6th largest by market cap, according to CoinGecko. And the project was co-founded by 9 individuals, including U.S. President Donald Trump, his 3 sons, and the United States Special Envoy to the Middle East, Stephen Witkoff, and according to its website. In July, Trump disclosed he had earned a windfall of $57.3 million from the venture, alongside his meme coin deals and exclusive dinner in April. And the president links to crypto have stirred controversy in Washington, with some lawmakers claiming the possible conflicts of interest there. So they're like, oh, why is he in there? He shouldn't do that, but he's doing it. I love Trump. But that's what's actually going on with the WFI token. So you're wondering what's going on with it. Price is going down. That's just the token's finding its price. It was just released since on the market now. It's got a low circulating supply. So long-term investors are trying to put in a vote to see. It's like, yeah, let's do some buyback from our fees and just put them into coins so we can burn it. That way we can do it. But some of these guys are saying that the team behind it should be able to keep a long-term valuation going even further. But that's our WFI news. Now let's talk about some a meme coin that Governor Gavin Newsom is coming out with. Or is he coming out with? He was just talking about it. But California Governor Gavin Newsom fires back at the U.S. president with the Trump correction coin T. So you may be seeing on the DeFi space a lot of these coins coming out right there. And that's definitely going to pump that coin short term, not long term. So if you want to play the pump game, you can try out that coin if you can find it. Now, California Governor Newsom on Friday teased a new satirical meme coin called Trump Corruption Coin, part of what he described as a broad push to mock U.S. President Donald Trump's growing ties to the crypto scene. Now, the governor made the remark during a high-profile appearance on the Pivot podcast and at the California Agenda in Sacramento Summit, saying that the coin would be tied to his campaign for democracy. Now, governor's mocking move. According to Newsom, the token is meant to be a political satire and a fundraising tool. Reports have disclosed that the proceeds would be directed toward redistricting work and voter outreach, and causes the governor has said are central to his campaign efforts. Now, he framed the idea as the way to highlight what he calls the absurdity of well-known crypto maneuvers tied to the president. Now, here is a post from Blue George. Gavin Newsom, we're about to put a meme coin out. Kara Swisher said, is it going to be a gold Gavin coin? And then Newsom said, no, it's Trump corruption coin. This is one of the great grifters of our time. His family is sent out before these foreign trips doing deals and the crony capitalism, and he just kept blabbering on later on. But Newsom's comments come after weeks of increasing pointed online trolling. He has been selling parody items in Patriot Shop that mirrors MAGA-style branding, and his team has used all caps, social posts, and AI-generated memes to needle conservative figures. The coin teased was delivered with a jab. When asked if it would be called a Gavin coin, he said no, it would be Trump corruption coin. Now, again, this is a direct response to Trump's crypto moves. Based on reports, the governor also drew a contract with tokens tied to Trump. The president's earlier foray into meme coins and recent crypto-link activity surrounded his cycles, and reports have referenced Trump's own Solana-based token, which was released earlier this year and has drawn scrutiny from critics. Now, political strategists say that the stunt serves as a double purpose. It keeps Newsom in the headlines, and it forces conversation about the messy overlap between politics and crypto. And campaign aides declined to lay out technical details immediately. Now, it was not clear if the meme coin would be a fully tradable token, a novel NFT, or a limited run collected tied to the Patriot Shop. What was made plain is that the move is a satirical and activist tone. Now, what to watch next? Observers will watch 3 things closely: whether the coin is actually minted on a blockchain, and how much money it raises, and then also how regulators respond to it. So meanwhile, Trump just backed the launch of the World Liberty Finance token, promoted as a major part of his crypto push, and the crypto coin saw heavy trade in its first days publicly, but then dipped about 30% after its launch, raising questions about the stability of long-term investors' confidence. And the development added more fuel to critics who say Trump's embrace of meme coins and crypto projects is less about policy and more about profit. Well, no, Trump's more like the meme, like his meme coin, he wasn't even a part of that one. Like, that was a team about it. Yeah, sure, he makes a profit on it. But the World Liberty Finance is supposed to actually deal with more like future plans with future exchanges. That's going to be the governance token to make changes out there. So it wasn't really more of could have been an investment, but it's more if you want to be a part of it with those changes. Now, with this coin, knowing that it would go to Newsom's actual campaign, That's a big thing, difference. It's like, I know it's a meme coin. It's fun to play the game because you know the coin's going to pump. But do you want to support this token? Are you inadvertently supporting Newsom by just playing this game out there to try and make more? That's a question. Like, and now I'm like wondering, do I actually want to maybe attempt to play around with this coin or not? I really got to sit and think about that. But just being aware, guys, those who do play the meme coin space, you will be seeing this coin come out. And again, that's Trump correction coin. And again, things to pay attention to if it's actually going to be minted. So that's what we'll be paying attention to later on. Now, lastly, for these last couple of articles I have is just a few scams I've been going on, just like we saw Coinbase trying, or not Coinbase, a fake scammer trying to pretend to be Coinbase to me. Looks like you want to hide your crypto because an infamous Try Me game on Discord scam is on the rise. So if you use Discord, be aware of this. So an ex-user known as Princess Hippio said that they lost $170,000 in crypto and NFTs to a scammer who infiltrated a Discord server and pretended to have mutual friends with them. So last month, a crypto user and NFT artist, Princess Hypio, told her followers that she lost $170,000 in crypto and non-fungible tokens after a scammer convinced her to play a game with them on Steam. So while she was mindlessly playing with the scammer, they were secretly stealing her funds and hacking her Discord. The same tactic was used on 3 of her other friends. She wrote on a post on X, pointed it out. So here is her post saying, as many of you know, a couple of days ago, I was drained of around 170,000 USD worth of crypto and NFTs. 3 of my other friends were also drained in the exact same way on different days. I am making this post for you all to be aware of this scamming tactic so you do not fall for it the same way, because I would not wish this on even my worst enemies. Now, I will be merging all the tactics they used on my friends as well, so not at all this happened to me specifically. Yes, it is a little silly to get drained this way, but we were not aware that it was even possible, and we just want to be kind to newcomers, so it was the good of our own hearts that was taken advantage of. Now, 1, these drainers will join some sort of Discord server or group to chat you up, lurk on you for weeks to understand some of you and your friends' lore and inside jokes, and then they target someone in the chat. In this case was me and my friends. They tell you that your friend invited them to the server, and at this point, they will have tons of info about your friend from lurking, so it'll seem like they're actually mutual. Now, it turns out that the tactic has been around for a while now and is known by some as a Try My Game scam, which users have been reporting about for years in different forms. Now, speaking to Cointelegraph, Kraken's chief security officer, Nick Percoco, said that these methods have become an increasingly popular attack method, and it's called the Try My Game hack. Now, how it works, the crypto version of the scam involves a hacker joining a Discord server or group lying in wait, learning about how users interact with each other, and later using that information to gain trust. Now, the hacker then asks users if they own crypto or NFTs, often feign interest to ask questions and gauge what digital assets they might own. Now, in Princess Hippio's case, they had a Melody NFT, which resulted in her being the target. Now, after identifying a target with crypto, the hacker invites victims to play a game, sending a link to a server with Trojan malware that provides access to the user device, which then allows them to steal personal information and drain any connected wallet that they have up. Now, in Princess Hippio's case, the ploy involved convincing her to download a game on Steam by offering to buy it for her, and then the game itself was safe. But the server on which the game was being hosted was malicious. So she lost $170,000 in crypto NFTs from the attack, she said. Now, it comes only days after Discord released its deceptive practices policy explainer, warning that promoting or carrying out financial scams on the social platform violate the terms of use. Now, again, these scams do not exploit code, they exploit trust. Attackers impersonate friends and pressure people into taking actions that they normally would not take, said Percoco. So the biggest vulnerability in crypto is not code, it is trust. Scammers exploit community spirit and curiosity to take advantage of good intentions. So attackers embed themselves in communities, learn the culture, mimic trusted friends, and then strike, he said. Now, Gabi Euricia, chief information security officer at the cybersecurity firm Halborn, told Cointelegraph that the scam combines social engineering with malware, and while not very sophisticated, it's insidious because of its abuse of trust among members of the community. Now, it's not as important as traditional phishing in volume, but it's more and more frequent in Web3 and gaming communities where there is a mix between peer-to-peer trust and high-value assets, he said. Now, the key here is the psychological manipulation that attacker starts to be a part of the community and learns a slang and then just introduce themselves as a friend. Again, that's how scammers always move. They try to befriend you. It's a long-haul game. So by the time you finally got scammed or you're being scammed in the process, like when you go to somebody, they just keep going like, the victim just goes, I trusted this person. I knew him. It's because they pretended to be you. So they're taking a vulnerability of your trust. Now, scammer tactic moves past crypto. In February, a user under the handle Ray the Raven posted to Malware Bytes forum that they had fallen prey to the infamous scam after someone they thought was a friend sent a leak, and Reddit forum started in July also warned of scams targeting. Now, Percoco told Cointelegraph that while the crypto industry trends to see these scams first, the tactic spreads across the sectors. He said that the best way to avoid being snared is to have a healthy skepticism, confirm identities through another channel, avoid running unknown software, and remember that doing nothing is safer than taking a risky step. So yeah, that is very true. So if something feels rushed, generous, or too good to be true, it's always almost as do not trust, verify. So again, just very, very be cautious. Eurisha also said defense against a scam involves very specific habits, such as stopping to think before signing anything, keeping privileges to a minimum, and avoid using the same device for gaming and management. Now, another from the community side, there's also much to be done limiting direct messages from strangers, verifying new members, and strengthening security to verify new members and strengthening the security culture. Ultimately, the big challenge isn't just technology, but culture. So there's also been fake recruitment campaigns out there. North Korea is trying to apply for jobs in like top companies, Gemini, Coinbase, Kraken, and then they're gaining user information to spread that scam there. So we just got to be on high alert in this crypto space to not fall for any of these scams. Again, it's safer to do nothing than take a risky step out there. And again, if you feel like something's not wrong, join the crypto club. That is why we're here. We have at least 6 different locations right now. Actually, 5. St. Louis is next, but here in Sarasota, Nashville, Massachusetts, Dallas, Las Vegas, St. Louis next, and we plan on rolling out even more in the coming years. So guys, like, we are here to help keep you, just to try to keep you as safe as you can. Because again, there's nobody else you can go to in the space, so that's why we opened this up. So if you feel like you're being scammed, give us a call, join the club, and we will be glad to help you out. So that is about it, though, for all this crypto news. There was another scam, but we're already past an hour, so time has been flying by. I got a class to do, but the Venus Protocol user suffers $13.5 million loss from a phishing attack. They did a study. It wasn't anything with the code at all. It was just user error. People fell for the scam. So again, guys, stop falling for scams. Don't trust these people online unless you actually know them, and just stay safe out there. But that's it for the news. Let's see. It looks like our Fear and Greed Index, people are at a 39. We're in fearful territory, but that is the good time to buy. When people are fearful, the market is due for a correction. When we're greedy, the market might be corrected. But that's it for the news, guys. Thank you for everyone who tuned in here. My phone is blowing up. Looks like it's Bitcoin Ben, so I got to answer that. So everyone, have an awesome Tuesday. I'll see you again tomorrow for some more crypto news. Peace.
In a world where your data is constantly under attack, one company stands for your digital freedom. Introducing Calyx Solutions, your gateway to ultimate online privacy and secure cryptocurrency trading. Meet the Liberty Laptop. With its modified OS and advanced tracking prevention, it's your shield against surveillance. Access restricted areas, use recommended security software, and browse with confidence. Your digital footprint? Virtually non-existent. For the crypto pros, we present the Crypto Laptop. Pre-configured on premium hardware for secure trading. Optimized for your favorite wallets and exchanges, it's the fortress your digital assets deserve. Both laptops come with expert individual training and support. You're never alone in your journey to digital empowerment. At Calyx Solutions, we put you in control. No more worrying about data breaches or compromised transactions. Ready to join the revolution? Visit calyxsolutions.io and choose your perfect laptop today. Plus, become an affiliate and earn while sharing the power of digital freedom. Calyx Solutions. Unlock your digital freedom. Give us a call or text at 702-845-8276 or visit us directly at calyxsolutions.io.